Yeah, it's encouraging to see markets show some resilience, but it does look like it's happening for the right reason. I know last week a lot of our clients were very concerned about the economic outlook because, one, the Delta variant was still surging across the US, and there were a lot of questions about how effective vaccines are. And I just think in the past few days, we're starting to get things that are what we call more half full. Florida, for instance, it looks like COVID's rolling over there pretty decisively. And then I think the formal approval for the Pfizer vaccine is great because it really allows private institutions and governments to kind of mandate vaccines. So I think it's rallying for the right reasons.
You've been, Tom, often, a lot of people look to your notes for some of these COVID charts, and especially ones that indicate we're near some sort of peak. You've been really looking on the bright side throughout this whole ordeal and have been proven right with your bullish stance. At some point, though, does the market factor in the fact that we have these life-changing, game-changing vaccines, that we hopefully will get back to some sort of new normal, and at the same time, we've got a lot of stimulus that is helping the market? At some point, is that already baked in the cake, or will the market just keep climbing this wall of worry that you pointed to?
It's a fair question, Sarah. I mean, for the most part, I don't think it's a central view for most investors that COVID's going away. So I think the idea that it could be peaking, in Florida, it took 40 days and it peaked in the UK 45 days. If that was true, markets could look through the surge right now. But I think for the most part, there's sort of a lot of fear about the Delta variant. And then I think from an earnings perspective, I mean, earnings were largely ignored this season because of COVID. But we're seeing so much operating leverage. I think the big surprise is positive revisions, which have happened this year, haven't really been rolled over to next year. I think S&P earnings this year could be over 200 and, something closer to 240 next year. I mean, I think consensus is 218 or something for 2022. So I think there's a lot of positive revisions coming and a lot of pent-up demand. And, hopefully we get some good news, but I don't think good news is really baked in.
Mike, if we did see a meaningful fall or confirmation of a fall in Delta cases, do you think that markets would get a big boost from that, or do you think that is kind of factored in already, given that we never really saw the pullback that we did in Asia, for example, over recent months?
Right. At the index level, we didn't. I think, normally under normal rules of engagement that we've had for months right now, you would expect that to be another opportunity for a rotation back into the cyclicals and the financials and industrials, which we saw a little bit of today. But today was not really pronounced in a reopening direction. Shopify and Zoom were up just along with, airlines and leisure stocks. So I don't think today was necessarily all about some kind of one-way storyline about reopening. It was part of the story today, but not all of it. So I do think that it might be one of those occasions for reloading of the cyclical trade if we really did get that. But as you suggest, well, it's not as if the overall market got punished because we were bracing for a kind of COVID wave that was going to really curtail economic activity the latter part of this year.
Well, Florida cases rolling over, Tom, is certainly good news. We still have back to school to deal with, and there are rising cases in states that have seen schools go back in session, and everybody's now back to in-person learning this fall, and pediatric hospitalizations are reaching new highs, something everybody's watching, I know, including you. So what would happen, do you think, to the market if we did take a step back on the return to back to school and people got worried about their kids and it influenced their behavior?
Yeah, that's on everyone's mind because you're right. It's COVID affects people, not just affecting markets, it affects people's lives and personal decisions and their travel plans. There are many studies. In fact, I found one from University of Utah that show when students mitigate with masks, transmission is far lower. I mean, Delta might be different, but I think schools do need to take steps to try to limit transmission. But you're right. I mean, that's on the top of people's minds. Last year, though, Florida didn't take any steps to mitigate transmission, and they were largely back in person, and yet Florida cases rolled downwards during back-to-school season. So, COVID's a mystery.
Josh, I know you don't think that the likes of energy names or banks really matter for the broader indices when the trillion-dollar market cap companies are leading the charge, but are there any of those cyclical sectors that you've been tempted to buy over the course of this pullback in those names over the last month or two?
So I don't know that I've been like racing to buy cyclical stocks because they're cyclical, but I definitely have holdings in many of them. But I want to go back to what Tom was talking about, because I think this is the biggest issue for the market right now, way bigger than Jackson Hole or whatever else. Tom, do you remember 2011, where like the news from Germany and Greece and blah blah blah? It would almost like ebb and flow, but with each successive burst of fear-mongering, it mattered less. Stocks gave you less of a reaction. Interest rates gave you less. To me, the Delta variant has felt like the European crisis circa late 2011, where we were just like, all right, we get it. It's a mess, blah, blah, blah. Let's get on with our lives. Do you see it the same way as somebody who was the chief strategist at JP Morgan during that time and talking to people at the highest levels about that crisis? To me, it's really, really similar.
Yeah, I remember that period really well, Josh, because we had the peripheral crisis. We had the downgrade of the U.S. debt ratings at the time, and people were up in arms. But you're right, at some point the market began to sort of find its focus or cornerstone away from those headlines. And I think that makes sense today. There's a lot of pent-up demand here. I think there's still a lot of cash on the sidelines. That's one reason why, if we thought about a rally into year-end, which is our base case, it's really an everything rally. I think it's people putting money back to work because they got scared by the volatility. I mean, the Bitcoin rally back towards 50,000, I mean, that defies all sort of fundamental thinking given the actions taken by the China and U.S. So, I mean, it looks like a risk-on period into year-end.
Josh, the other thing about that
$5 trillion
period
in money market
2011,
funds earning, $5 trillion in money market funds earning negative real returns after inflation.
Exactly.
5 trillion. Prior to the pandemic, it was 4 trillion. So the growth in money market assets is up 20%, and stock market forward PE has actually declined this year because earnings growth has been faster than the growth in the market.
Josh, $1 trillion incremental in cash, 20 trillion incremental from the lows in equity market value. What would you tell your clients if they had to rebalance right now, if they were up that much in stocks and their cash holdings went that much lower as a percentage?
Yeah, I think it depends if you're doing a rebalance on a calendar basis or you're trying to be opportunistic. We try to be a little bit opportunistic, and this is probably as good a time as any in a sleepy market where there doesn't seem to be a tremendous amount of news in front of us. Earnings are behind us. It's not a terrible time to do a rebalance. But then what? And how severe of a rebalance do you really want to do here?
the other thing I was going to bring up, Josh, is the reason that in 2011, why we became a little number to all that bad news coming out of Europe is Mario Draghi said, I'll do whatever it takes to save the euro. And that actually argues for why Jackson Hole is important. And that's because the central bankers came in and they just numbed everything with trillions of dollars and commitments and pledges to do anything to keep the economies afloat, to keep the currency together, whatever it takes. And there are parallels to this situation, I would say, because Jay Powell went all in at the beginning of COVID and gave a strong signal that he's going to be there from the beginning until the end. And now we're talking about what the end is going to look like. And so it actually, I think, really does matter what happens to Jackson Hole for the entire market direction, doesn't it?
Well, I think you will absolutely get volatility if there's an unexpected comment made. But what are we really talking about? Like a down 500-point day in the Dow? If you think about who's in control of this market now, the people who are living off the money that they have invested in stocks are gradually exiting, and a new generation that loves volatility and is actually enjoying themselves when they get opportunities to buy stocks lower, they're the ones coming into this market. So that bout of volatility, if Jay Powell sneezes in the wrong direction, or Kaplan gets out of line, needs to be straightened out, or whatever, that's going to be very short-lived. And so that's why I feel...
Whenever they do it, whether it's Jackson Hole or whenever they start tapering and then talking interest rates, that's going to be a major factor. That's all.
Sarah,
Not necessarily this week.
Existing home sales this month, we just got that data today, up 18% year over year. Last month it was like 25%. We need that to slow down. It's not doing anyone a favor. It's not helping the economy. There's no reason they wouldn't taper, and there's no reason for a long-term investor to think a taper is an emergency. So I think it's important that we cover Jackson Hole. I think it's important that we listen to what gets said. But can you find me somebody who sold on a Jackson Hole speech and is happy about it today? Like, I don't think that person on earth exists. So investors need to be temperate around these types of events and take a deep breath before reacting to them. And I think that's something all of us can agree on.
That's fair.
We're going to continue this debate because it's a great one in just a moment. But let's hit pause and get Palo Alto